In this lecture, I'm going to try and dispel some of the myths that have been perpetuating society. They're just every time you turn on the radio or television, you're bombarded with somebody trying to sell you gold coins and telling you how the dollar is worthless and how wonderful gold is and what a great place that is to put your money. And anyone who has U.S. dollars is just worthless pieces of paper. So let's start with looking at what is money. And the three main requirements of money are: 1, medium of exchange; 2, that it has to have a standard of value; and 3, that it has to have a store of value. And we look at gold versus the U.S. dollar. Gold is not a medium of exchange. It does not have a standard of value, and although it does store value. If you hold gold coins, you are storing value, or if you hold gold bullion. The U.S. dollar meets all of these criteria. It is a money. When we talk about standard of value, for example, you can buy a new car for $20,000. They don't price you a car in ounces of gold. So the U.S. dollar is money. It meets all the requirements, and it is a fiat currency, which means that there's no precious metal or anything backing the currency. It's backed by the full faith and trust of the U.S. government. And in this country, our monetary policy is run by the Federal Reserve Bank of the United States. That's our national bank. The little graphic I put at the bottom of this slide just shows that people are plenty willing to sell you goods and services on good old U.S. dollars. And here's an iPod Touch. A lot of different places sell these for currency, dollars. If you were in England, they'd sell it for pounds. But you notice that no one quotes the price of an iPod in ounces of gold. So gold is not money, then what is it? It is an investment, and we know why we invest. We invest money, like the U.S. dollar, into assets in order to earn more money. Because money is what we need to buy things. So I've broken out investments into two different categories: financial assets and non-financial assets. Financial assets are IOUs, stocks and bonds, government bonds, treasury bills, things like that. Non-financial assets are things that are not necessarily that are not denominated in dollars. For example, real estate. Real estate is a hard asset. But we can also say the same thing about baseball cards, paintings, stamps, precious metals, including gold, tulips. Don't laugh. This has been, at one point, it was a major investment. And you can look at your education as an investment. You're putting money into your education in order to hopefully earn a return. And I hope you all earn a lot of money off of your education. So gold is just an investment, just like anything else. It isn't special just because it's a yellow metal and people have, it's been sought after for a long time. People have liked a lot of assets for a long time, including real estate, including financial assets. I've done a little graph here that I downloaded from Yahoo Finance that compares gold, the price of gold, from 1996 to the Dow Jones Industrial Average. So if you bought $100 worth of gold versus $100 worth of stocks, Dow Jones Industrial Average, some kind of a mutual fund, through 2010, which is about 14 years, if you held the Dow Jones Industrial Average, that earned about 100% return. And remember, this has been just an awful time for the stock market, the last 14 years. At the same time period, the gold shares are only up about 60% versus 100% for the financial assets. And what's striking is look at the volatility. Look here in 2001. What would have happened if you wanted to sell your gold that you bought in 1996 in 2001? You would have gotten about 20 cents on the dollar. So even though it's liquid and you can always readily sell gold, price is not guaranteed at all. I could have done this for 100 years, 200 years, 500 years. Gold is not a good investment over the long haul. There have been times when it's been good. If you would have bought gold in 2001, and sold it in 2002 or 2009, you could have made a lot of money. But this is timing the market, and as we've all learned, that is something that is impossible to do. So, in general, looking at gold over the long term, it is not a good investment, regardless of what the people on AM radio tell you. So I did want to share with you some lessons from the past. The U.S. used to be on the gold standard. We know that, and it went off. And a lot of people say that was horrible, but if you go into the past, you can learn that the gold standard was disastrous for this country. It put us into a horrible depression in the late 1890s. It really threatened the whole fabric of the country. Something that a lot of people aren't really aware of is Frank Baum's wonderful story, Wizard of Oz. We all love the movie. Well, this is about the gold standard and how it was destroying the people. Remember the yellow brick road? That was gold bricks. Oz is ounces for gold. Remember the yellow brick road got smaller and smaller. That's because gold is static. It doesn't increase like the population does. And a static money supply leads to a decreasing productivity in the economy. And it's disastrous for the economy. No economy in the world bases its money on a precious metal, and there's a reason for that. It's not good. So I hope that we can learn from the lessons of the past. Don't be swayed by these ridiculous commercials on AM radio and TV that tell you that dollars are worthless, but on the other hand, they're willing to take your worthless dollars and sell you some of their stupid gold coins. So to be a smart investor. If you want to invest in gold, great, but analyze it as an investment. Think of it that way. So thank you all. Happy investing and happy studying.